Well, good morning, good afternoon. Today, our topic we're going to address today is expanding employee ownership through partnering with family office and ESOP companies. Uh, as we all know, in the ESOP community and also the business community, there has been an effort to continue to grow employee ownership through employee stock ownership, through stock options, through profits interest, through ESOPs, through also employee owned trusts, which are not tax exempt, but they are a trust that hold stock for the benefit of employees. And all those vehicles have created a lot of interest in the financial community as more and more acquisitions are made throughout 25, 20, I guess 24, 25, and probably in the future years. So I'm John Kober. I'm a partner at Morgan Lewis. I'm in their corporate practice. I specialize in family business transition and M&A transactions involving ESOP companies and employee-owned companies, and I've did this for a number of years. And it's my privilege to have Colin Patrick, who's with Patterson Thoma, and I'm going to let him say a little bit about his background. Colin?
Hello, hi, Colin Patrick, Chief Investment Officer for the Patterson Thoma Family Office. I've been with the family for 13 years now. Began as a Chief Investment Officer and then evolved more to align with the family's goals of investing, not just for the current generation, but the future generations. Began my career as a tax accountant and always worked with high net worth individuals, but over time, really became more involved in the investment portfolios of the families I've worked for. So I've worked for two, and it's been a charmed life being able to kind of think about not just investing in general, but thinking about families and generational asset allocation and how you can think super long term and the benefits of being able to compound over hopefully decades.
Colin, I was thinking last night about your career path. You know, your career's taken you from a big four accounting firm, working on some very interesting projects with ultra wealthy families to family office and making different investments throughout the your career wherever in your different stops. But when you take a step back, I think it's important for the audience to understand what is a family office, because a lot of people think a family office is just one wealthy family and that's what it is, and they just make some investments here and there. So, what is a family office?
All the above, John. I've seen every version of it. I previously worked for the third generation of a family, and we ended up selling a very large oil company to a public enterprise, and it was bought by another public company. But along the way, the family kept what we consider, the golden goose together, just like an ESOP. There's a business that binds these people together, right? Whether they're employees, or co-owners, or partners, they're family members. And so the family office does basically try to maximize the wealth of the family, not just through the enterprise that it controls, or, once you maybe sell that enterprise, but then the assets afterwards, right? Whether we invest more into real estate or fixed income products or public securities. And so a family office really tries to help families of means manage their investments in a way that's consistent with their philosophy. For example, the previous family, after the monetization of the asset, the family member I worked for joined the Giving Pledge along with Gates and Buffett. And so my mission then became to really help with the philanthropy side. So I'm always in the accounting and tax and finance world, but just like you have a CEO, the family members kind of help determine, now what? What do we do? What are we trying to accomplish? And so that's what I would say in general, a family office really just tries to be good stewards of the capital and implement the family's wishes, be that philanthropy, further investing, explaining wealth transfer to their kids and just the responsibilities that kind of come along with, assets.
Colin, when I think about my career, I look back and years ago, there used to be some families here in North Texas you go to, and they would provide investments or they would buy a company. Um, and it was a patron you dealt with, and then over the years this collective group of as families grew from generation 3, 4, 5, they started pooling money in what I think what you were saying in a family office. So when you take a step back and you look at a family office today, and you're getting ready to make investments, would you do most family office operate like a private equity firm? Are they different uh, in how they approach their investments, their hold period, and their whole culture, their decision-making process?
Absolutely. Good news is there's a lot of similarities, and maybe more importantly, there's more um, differences between a family office and a private equity firm in general. And so you can think about a family office or a fund, they're going to have their preferences, or maybe they'll say, we do not invest in casinos or tobacco. And so as a family office, I know what my investment mandate is, or kind of what asset classes I can focus on or avoid, right? Um, and so private equity generally is going to be in a fund structure, but even if it's not in a fund where they might have 4, 6, 10 investments, they still have generally a finite life, right? Because the general partner, his goal is to find good deals, find good management, raise money from a bank, raise money from investors, and each one of those constituents is going to have its own preferences of time, liquidity, tax implications. And so on the family office side, it's easier for us to, I will say, be opportunistic, but what that generally leads to is we can differentiate ourselves by not having some of those stricter rails that a private equity fund might have, namely time, right? A lot of these funds really have to accomplish their IRR goals and their liquidity goals in some time frame, whether that's 3, 5, 7 years. Family office side, this year we bought some land in Houston, and I expect we'll be busy on it for 25 years. And so that's just one example where we can differentiate ourselves and think about, not getting into a hurry, but at the same time, sometimes you find a good company to invest in. And if you can compound that for years, I mean, on one hand, oftentimes it's tax efficient, right? To not necessarily monetize as soon as, something really takes off. And so that I think is super important. And we can also structure deals differently. A lot of times private equity firms are going to need a majority control. We can be a meaningful partner without having a majority control or control of the board. We can be a significant minority. Sometimes we'll offer debt solutions. We can work with, maybe there's a senior lender in place, but we can help with working capital advances or a mezzanine structure or some short-term bridge financing. So we're very flexible in how we execute. Whereas, again, private equity firms, and again, there can be private equity firms, there can be private debt firms. We can be whatever the right solution is for the company.
So when you look at your family office and when you walk down the hall in Parkland, there's another family office right next to you, and then there's another family office right next to it, and it just seems like the hallway continues on with family offices. Would you say that your each family office is the same investment protocol, the same decision making, and or are they different in many respects?
Probably more different than they are similar. The only similarity really being the fact that they have somehow professionalize their office, right? They have CPAs or CFAs or lawyers literally on staff to help administer not just the portfolio, but all of the family's assets, right? That could be rental homes, it could be private aircraft, philanthropy initiatives. It's a very wide-ranging mandate that each family has. And again, each generation might have different goals and ambitions. And so there's a lot of families here on campus that, maybe they have minor children and they're looking for somebody to kind of bridge that time gap, and maybe just that financial knowledge that they want to pass down, right? It's easier for sometimes parents to have a family office to help administer the money. And it's a little easier for them to be able to focus on their role as a parent and then say, oh, well, Colin says you couldn't have a distribution for whatever reason. So sometimes we're a little bit of a buffer, which is, I think, helpful for families, but it is helpful, I think, to separate the emotional part, the important relationships of a family from the finances. Doesn't always happen that way. There are some interesting stories out there when families get into fights over money. It's pretty terrible, but hopefully a good family office can help prevent some of that stuff. But to your real point, John, they're all different, and that's okay. That's, I think, part of the joy of having a family office. It's the family's able to customize their solution for their wealth, right? I mean, everybody could go down to the nearest broker or investment banker and say, hey, I want this, and they kind of just get along for the ride. But when you have that staff internally to be able to really customize how they invest, how long they invest, how much they have to deal with their taxes, I think that's certainly a privilege, for the families that can, choose to go that path. But there's a lot of wealthy folks that choose to do it themselves, and that's certainly fine too. So it's just an option available that it's kind of nice.
Sounds very interesting. I know that's why books have been written about families, right?
Vanity Fair articles. Oh yeah, there's all kinds of stories out there. You don't have to look too hard.
Yeah. So, well, when you step back from an investment standpoint, let's talk a little bit about Patterson Thoma as you kind of look at investments. What type of investments do you like and would make in operating companies that that come before you to you every week and you consider?
Well, I think a key distinction for Patterson Thoma is this family, gentleman named Dan Patterson, started a leveraged buyout business, exactly the private equity firms that we compete against now. And his knowledge in the industry of investing writ large, but like I said, equity, real estate, private credit, all these different asset classes, being able to be selective and opportunistic amongst those asset classes is the family literally enjoys investing. And so if my job is to go and find new partnerships, people that are very talented in their field, whether they're in venture capital or a real estate developer, and helping, be their partner, right? Whether how we provide not just capital, but a lot of it is in our background in the private equity world, being able to bring all that talent and resource to these businesses without those constraints we were talking about, timelines and amount of control that they may require. So working with Patterson Thoma is a unique experience compared to perhaps another family office that may be an expert in plastics or oil and gas, and they hire somebody to diversify the portfolio. My job and my team members' jobs is really to look at all the investments. There's a term a lot of people say in the business where, this guy's a deal junkie. And I don't think Dan would be offended if we said that, just because that's what he does for entertainment, right? He likes, being able to find good solutions for these businesses. And so it's not just, he just looks at his brokerage statement at the end of every month and just says, okay, how much cash do I have? And there's a lot of families that are very successful that do it just like that. Dan and his children like to invest. And so to your other question, the children are, they're professionals or young professionals. They're in their 20s and 30s. They have their own preferences in investments. And so it's not uncommon for me to receive an idea and I know to send it to his son or send that one to his daughter, or this one goes to the principal. And so being able to help them individually customize what they invest in, right? Whether it's maybe a little more on the philanthropy side or the venture capital side. And then you also need to think about the existing investments. And so we do think about diversification, but also the tax efficiencies between certain assets might have depreciation or depletion. And I know what is in a certain trust or in the family limited partnership. And so sometimes we will seek out a complementary investment that might help offset some of the other tax characteristics. And sometimes when those investments come in, I might know it might have what we intentionally call asset placement. So we have different entities. And so when something comes in, I might think about a venture capital investment might be more interesting for the kids and in their trusts. And so it can appreciate for a long amount of time. Whereas at the principal's level, current income might be a more important characteristic. But what I try to tell our partners when we're finding deals is just send me the deal and I'll figure out what to do with it.
Well, that's an interesting approach. And when you kind of take a step back, I was thinking about this morning when I was having my first cup of coffee, Colin. You got family offices, long-term investment, very patient, and then you've got ESOP companies out there that tend to be. There's some very good ESOP companies, like all companies. There can be some average ESOP companies, and there can be some poor ones, but the real good ones, they tend to be very lean on management and they tend to like to make acquisitions, but because of their repurchase liability, they have cash constraints. So tell me, what do you like about ESOP companies when you partner with them in an acquisition? Because the movement has been ESOP companies partnering with other investors to expand their portfolios, whether it's horizontal or vertical, diverse or similar. So,
First, I would say ESOP companies by their nature are very, very attractive to us. And that's mainly because of the embedded alignment that already exists within the company. A lot of times we'll find a company, maybe there's a sole shareholder and there's a management team that hasn't been able to participate in the growth of the business, particularly on the equity side. Maybe they have good salaries, but I know whenever I'm talking to an ESOP company that those people in that room are all aligned and we're all going to be rowing the same direction. So definitely want to start with how that is just a implicit pro on the list of how we think about things. As to your ideas of investing, John, whether a company is reinvesting in their own industry, looking at just add-on acquisitions, acquiring a competitor, maybe they're vertically integrating with a key vendor or key customer. With our private equity expertise and background, it's easy for us to facilitate that. And then the other idea that you mentioned kind of goes to my principal job, which is investing a portfolio that's perhaps more diverse, but not for diversification's sake. It's more to maybe match the characteristics or, to your specific idea of the repurchase liability. We, personally do a lot of investments that are on the private credit side. And so they'll have current income. And so if, we have a trust or an ESOP company investment or relationship, and I know they're looking to put some capital in a safe place, and then that can generate income to pay acquisition debt or whatever liability a company may have. We have enough incoming deal flow, where sometimes, even though I have a relationship with the ESOP company and they're focused on their business, I might have a complementary investment that might just fit what they're looking for due to its tax characteristics or cash flow.
Also, I was thinking as I was taking my second cup of coffee this morning,
How many copies did
you
you have
think
this morning?
I had several.
Okay, more questions. Got
Uh,
it.
it was a long night, but I was thinking, one thing about ESOP companies, everything you said about alignment and things like that certainly are true, but they are very resource thin. Great knowledge base, but when they go out and make an acquisition, um, they often don't have the bandwidth to oversee that. So when you co-invest with an ESOP, how do you address that? Because you may play a bigger role with your expertise or your connections. So how do you address that?
So ESOP or not, our main thought when we make an investment is about the execution, right? Are the right people running the deal? Do we have the right salespeople? Do we have the right chief financial officer? Do we have all the resources we need to execute the strategy profitably? And so we have internal resources. So sometimes on a small company, we'll literally do the accounting and payroll or the legal formation to help get this idea, going. And then eventually, as the companies grow, we have our own bandwidth. We'll have the ability to network and bring in the proper resources if we need a new chief revenue officer or technology officer. So with our, I'll say Rolodex of decades of being in the business, you're absolutely right, John. It's so critical that everybody does what they do best. And so if that ESOP company needs to focus on their specific industry and they're diversifying, or they don't know, or they don't necessarily have the time to go find those acquisition targets, we can literally serve that M&A arm for a company. If they say, hey, we're in this geography, we really need to go west or east, we have done that numerous times to really expand the geography, even international in some instances for companies. So it's all about the people. Get the people right, and it goes a lot better.
I think you're exactly right. You get the people right, no matter what service, industry, manufacturing, service, consulting, whatever. That's the right recipe. Well, I've got two last questions as we're getting close to the end of our time period. One is about governance. Um, a lot of people really think hard. Matter of fact, I think a lot of people overthink governance. Sometimes I think a lot of people underthink governance. So, let's say you co-invest with an ESOP company and they put in $50 and you put in $50 and you take on some leverage and you go out and you buy a $200 company. How would you view the governance on this? Would you expect the family office to have control over the board? Would you expect the ESOP company to have control? What would be your expectation?
I think it goes back to, again, the right people. Sometimes that's us, and sometimes that's the ESOP company. I also believe in independent board members where
Mhm.
appropriate. Um, your version of $50 and $50, if they put in $50 of debt and I put in $50 of equity, that might change how I think about board construction. But again, it's about having those constituents to have a voice, and not necessarily for anybody to be overwhelmed. Um, just because maybe we put in more dollars, we don't always require more control, and vice versa, right? It just depends on the actual business that we are entering. And you can even structure it, right, where the board can even change as an investment performs, right? You
Right.
probably familiar with certainly terms like common equity and preferred equity. So you can structure it such that if one party is more particular on the timing of their cash flows, maybe control can shift once those cash flow objectives have been met or the debt has been retired. So I would say, first, we're very flexible on governance, on, whether like I said, we're a minority or a majority, if we're a lender or equity or any combination or different variations of equity or debt. Completely open conversation. And again, maybe that's what you're going for. Private equity firm might not feel the same way as we do, as long as, again, back to the people. If the right people are in charge of the decisions and we all trust those people, and again, sometimes that's going to be independent board members, very flexible on that.
On, I've got one more question as we close today. So if you make, if you're presented with an opportunity to make an acquisition with an ESOP company, and let's just continue on with $50 and $50 going in, what keeps you up at night when you think about co-investing with an ESOP company? Maybe there is nothing, maybe there is something, but do you ever worry about investing with an ESOP company that has employee ownership?
I think we're so intentional with our time on the front end. And again, we can execute quickly. We make fast decisions. It's just not a lot of red tape around here, but it does come down to the character of your partner. So I would say in general, the investment itself and the execution of how that investment is performing might be more what gives me insomnia as opposed to who my partner is, because I'm not going to get into a partnership with somebody I didn't trust in the first place. And that, even then, the legal documents, we always think about, if you do it right, you never read the document again, right? I mean, the document seems to be written, if you have a good partner, you're going to come to good decisions and good conclusions. And sometimes that involves shutting down an investment, or is it time to add more than $50, right? There's an opportunity here that needs to be accelerated. And so when I think about an ESOP, again, I know I've got the alignment right. I think we have, in general, longer time horizons, which gives us the optionality to either get off the bus if we need to, or, fill up the tank and go farther down the road and let it compound. So what keeps me up, again, is more probably the investment itself. Do we have the right people in place in the company doing the deal? But I don't ever want to question who my partner is in a deal.
I think that's a great response because it all kind of goes back to your original question and response was it's all about the people. If you can trust the people, as we know, there's a lot of owners in the sports world that they do everything on a handshake. Certainly, there's legal documents, but the handshake is golden. So, with
Well, and
that,
we think a lot about, sorry to interrupt.
oh, that's right.
One of the things about having a family office, and just like, these great ESOP companies, your name's on the door, right? So your reputation, okay, maybe you made more money on this deal you otherwise would have. We want to be in this business a long time, right? Just like these ESOP companies. And so treating people right is just as important as making money, right? Because I want to have another deal and another deal. So that's how we think about it.
Well, Colin, thank you very much for your day. I know you've had a busy day today and you're and it's not over yet. So I think we've come to the end of our hour. So thank you very much for sitting down with me to walk through the different aspects of a family office and co-investing with an ESOP. Thank you.
Treat. Thank you, John. Take care.
Take care.